Now, this is currently how much is on the $100 a month portfolio. We're currently sitting almost nearly at $4,500, and if you're investing anything small like me, this video will definitely help you out. Now, it's currently at $4,499.50 and a little over 2 years of contributions, so it's around $2,800 I've totally added to this portfolio. So that's around a 70% increase, and I'm going to count that as an overall win for this portfolio. Overall, for the week, I'm up around $42. For the month, I'm up $154. For the 3 months, I'm up $250. And then year to date, things get a little shaky, but it should around 30%. And I do it all by literally dollar cost averaging into primarily an ETF, VOO, and a few individual stocks. And I haven't thought about anything else. The dollar cost method is so hands off that all you have to do is literally deposit the money that you have available and have no headaches. You just primarily pick an ETF. You can pick individual stocks. For me, it's primarily in Microsoft, Amazon, Apple, and Facebook. I wanted to add Google, but I didn't really want to diversify my portfolio in individual stocks outside of the VOO. But what I plan on doing is literally only buying on the down days. Now, I just wanted to make a portfolio update video primarily because I keep hearing how the stock market's going to crash. We have an upcoming election. The fear greed index is off balance. But this is when I invest. See, because I only have $100 to invest, I have to sort of strategically try to pick my days. And I only pick down days or down market days. And this is overall helping my cost basis. So you get a greater return if you only pick the down days. But if you look over the long term, investing in a down market isn't an issue. Now, I made this short almost like a year and a half ago, but it still holds up today. If you're investing in a strong index fund and you're worried that your portfolio is down year to date, what I want you to do is just zoom out. Look at the long-term growth of this index fund. This was the dot-com bubble, the '08 crash, and the COVID crash. And remember, investing is for the long term. See, when you take a step back and look at the market as a whole, as long as you're investing in something that you find that has value and is fundamentally strong, you're not really worried. Now let's take a look at that exact ETF that I made a video about. Ticker symbol SPY. It's currently at $562, which is up around 40 to 50%. So in that time, if you literally would have done nothing, buy during the crash, you'd completely be up. So in these situations, as long as you did nothing or even bought during the dip, you wouldn't have anything to worry about. I primarily stick with the S&P 500 ETF, and this ensures that I'm diverse across multiple stocks in the event anyone goes down. And yes, while you can be across multiple individual stocks, this only opens you up to more risk. While the growth can be greater, I just don't want that headache. And if you're sub to the channel, you saw the video that I made about the Redditor who essentially invested his $700,000 inheritance in Intel stock and essentially lost 30% the next day. That was literally a gamble. And I say gamble because they essentially chose to invest in a company that hasn't done anything stock-wise in the past 20 years when he could have just dollar cost averaged into an index fund and his money would have been relatively safe. His risk would have been completely minimized if he simply chose an ETF like VOO and didn't worry about it. But here's the thing, when you're investing for the long term like this portfolio is, I'm not worried about tomorrow. I'm not worried about the day after that. I'm not worried about the next year. I'm worried about years and decades from now. And if you were to think logically about the stock market, a lot of the times we've seen crashes. In fact, crashes are talked about nearly every week. As long as you're holding something that's strong and you're diverse, you don't really have to worry about it. And with my $100, essentially throughout the month, whenever I hear someone worrying, that's when I'm buying. Whenever I see a dip, that's when I'm buying. But if you enjoy these portfolio updates, subscribe to the channel or let me know down in the comments below what stocks or industries you want me to look into. I mainly wanted to keep this portfolio simple and safe so anyone could follow it. It's just simple proof that as long as you start with something, you could eventually make money. This is literally a snowball sized portfolio that's slowly morphing into an avalanche, so I count it as a win.